Hi, everybody. Welcome back to Markonomics 101 presents another edition of Hoot Loot, the midweek edition. We are the place that you come to be informed, not misled, like you would be listening to the financial media, the cable news networks, which are the leading cause of mental illness, and a whole lot of other bad things. We're the place that you come to. The only thing that we want to do is tell you the truth, how things work, what to expect, what the odds are, how to do it better, how to make money, and that's it. Be informed, not misled. Come here for information, education, but not for any fabrication. This is Hoot Loot, Markonomics 101, and we're going to go to the charts here. I am in an oil field because this show is called Cannabis, Commodities, and Currencies. And we are going to expand upon last week. And right now, so far, all the stuff that we've been telling you to expect has been happening. We want to show you a little bit about what that is and give you some insight as to what that's all about. Okay, so we're going to go to the charts. Here is the Dow Jones Industrials. As you can see, breakout, just what we've been talking about, Dow Jones Industrials. Also, we have this is the NASDAQ right here. And as you can see, the NASDAQ broke out itself too. We'll show you why. Some of the companies look like they're doing pretty well, but everything is green right now. Same with the small cap index, breakout, looking good. I would just say, who knows how high this will go. Also, the Standard & Poor's not quite as high, but still breaking out. It didn't look. It looked fairly toppy where it was. This thing can go, and I think that we have some ideas as to why that is, and we'll talk about it. This is the transportation or the transgender American index. This is highly correlated to the economy, and what you're going to see is an amazing correlation of industry sectors and companies that are very correlated to how the economy is doing, that are showing that the economy is going gangbusters. Well, is it? How can it be when everybody's at home? Everybody's on lockdown or this or COVID that or Zoom meeting this or, no, I don't think that's happening. So we're going to show you some of those why that is in a lot of cases. If we go on to some of the big companies in the NASDAQ, this is Apple Corporation. This is the your favorite big time company that is everywhere and in my phone and every single place that I reside. Apple just broke out of a triangle, as you can see, nothing but green, looks good. It could have easily broken down. It did not. We thought it was going to, but it might not. All you're seeing is green. Same with Amazon. Amazon was a company that we saw as really looking very toppy and rounded top and head and shoulders with in red, but it too looks like it's going to break up. And if we go to Facebook, Facebook also looks like it is going to just continue on a new trend line, and it's right now is looking pretty good. It continues to bounce off the same line and establish a new trend line. So even though all of its faults that Facebook has, including the fact that the new look is just crummy as all hell. But its stock is doing really well. Also, this is Google. Now, Google, if just in case you're wondering, is not like it's a noun. It means 10 to the 10th 100 power. So when we looked, lots of people have been asking, what does Google mean? What does Google mean? Well, that's what it means. Now, we couldn't find out what alphabet means for the life of us. So I don't know why it's also called alphabet, but the Google part, that's all we could do. All right, so that looks good too. Breaking up to a new high, unbelievable. Microsoft, same thing. It's starting to look like it could look good instead of looking bad. Netflix we added here because it's another one of those like real high flying speculative companies, and it looked like it's going to break up now also. And you just look at it, and there's Tesla. Tesla is, an amazing thing in and of itself. Elon Musk was just here, and he just, oh God, I wish he would go, switch to vapes. He was here, telling us about his car, but Elon is really neat. Elton John loves him. Elton John wrote a song about him called Elon likes his money. He's got a lot, they say. Sorry. Anyway, that was Elton John's Elon. So, but he's out with the Boring Company being boring. So, I'll see you later, Elon. All right, so that's that. This is Bitcoin. Bitcoin is off the charts. Bitcoin has made a new high. Now, why has it made a new high? Because it is the anti-dollar of anything. The Winklevi, who battled Mark Zuckerberg, may actually win the war. Because they bet, whether it was luckily or not, they bet on Bitcoin in a big way, and they're going to just do really, really well. So Bitcoin is the anti-dollar. It's moved up. We will talk about currency, those at some other point, cryptos. But here's the dollar. Speaking of anti, what it is, this is the only red you're going to see. The dollar's broken to new lows. It is largely responsible for what is going on with prices. As the dollar goes down, those prices go up. And, mild inflation is good for the stock market. It's when the inflation reaches a certain point that it becomes a problem. And I don't know, but it sure does look to me like that could happen. And, that's why, the things like commodities, things like money printing, all of those are just, factors that you have to take into account. So the dollar's broken down. I would be very concerned about that. That's why we have here we've been talking about the 10-year. This is the 10-year bond. Talking about that in an uptrend, continues to be in an uptrend. 30-year bond in an uptrend. We've talked about that too. Junk bonds are here for a reason. They are going up. And junk bonds are somewhat of like credit risk. What they're saying is that they're at new highs, and what they're saying is investors are saying there's really not the credit risk you perceive. Now, that's very curious, but it is what it is. CRB is the Commodity Research Bureau Index of Commodities. It's made a new little high in the recent period, and this is continuing to rise to new higher levels, led by things like oil. And oil is so present in just about every product there is, everything there is, that it just filters its way through the economy. So as oil's going up, we're going to start to see something different than what we have seen. Here we have copper. Copper is just going crazy. Copper is also very coincident with the economy. It's called Dr. Copper for a reason. It's going into new houses, and people are building new houses. Let me put it that way. I'm not sure who's going to occupy them. I'm not sure who's going to buy them, but they're building them. I guess they will come, or they think they will come. I don't know. I don't know which one it is. This is gold. Now, we've been really bullish on gold, and we still are, and more than ever. This is a really good entry point. I mean, gold is basically had a very normal pattern of consolidation with a slightly downward slope. It probably was really choppy and hard to trade. And here's where some of the art in technical analysis and charting occurs. You actually don't really know which is the right, the right sort of story that the chart's telling you. The gold definitely was a hard one to gauge, but the thing to keep in mind is it's in a long-term bull market, and when you're in a long-term bull market, you take opportunities like that when it doesn't look good. Okay, so now we've got silver here. Again, this one looks pretty good to me. I still love it. This is platinum right here. Platinum is yet another one that's going, sky high. Here we go with now there's a bunch of companies also that we're going to talk about that are economically sensitive and that are screaming the economy is going nuts. Okay, this is a company called Baker Hughes. It was formerly owned by GE, General Electric. This company is in the business of drilling for oil. Now, now look at that. It is just absolutely going nuts. It is telling you that there is going to be demand for oil or something. Somehow, some way, there's going to be demand for oil. And I think we know. This is Chrysler. Look, the automotive companies are going crazy. And, who has money to buy cars? That's what I wonder. Well, I think we have an explanation, and we're going to tell you in just a minute. This is Freeport McMoran. Big time copper, gold, all kinds of minerals going absolutely crazy. And for a long time, and it's gone unnoticed. That's what's so great about it. It's unnoticed, which means it can go on a lot longer. Okay, here you have Ford Motor Company. I can't believe it. Stodgy old Ford Motor Company is just screaming higher, and there you go. And we're going to show you General Motors too, right there, screaming higher. Now, why would this be happening? Why would companies like General Motors, Ford, economically sensitive companies that we see out there, why would they be going up when they're consumer durables basically, and people don't want them? Well, this looks like an inventory build. When there was the absolute panic that lasted 33 days, there was an inventory draw, and that was that worsened the fall because inventories went down. Everybody defensively just got rid of inventories. There was no production, so now now things are normal. Oh yeah, normal. Normal. Okay, so I think they were normal. Yeah, normal. So now that they're normal, they think that they're basically building up their inventories. Well, that's not going to last very long, and I don't know what else to explain it with, because there's no reason the General Motors and there should be some huge economic recovery. I mean, there just is no reason for it. Anyway, here we go. So Target also doing well, and retail is 70% of GDP. So when Target does well, we're doing well. To me, again, I'm going to guess that it is a lot of inventory buildup, and that Target is merely, there were things that were shortages and things like that. And now with deliveries and other things and online, the ability to buy online, they have done an amazing job. And look at that gain in the stock, which makes it look like the retail sector looks really good. Well, it looks really good unless you're J.C. Penney. Then it kind of looks crappy. It's like Jacques Penney is mort, as they say en français. I do speak a little French, which is why all the women are all over me. You knew I was going to say that, didn't you? Okay, well, I didn't want to disappoint you. Okay, so now here we go. We have got the bank index. Lots of green. Okay, the broker-dealer index breaking out, looking green. Now, one thing just to keep in mind, when there's so much green and so much thought that everything is looking great, that's a time when things turn around. So just be aware that the green is also, it may go on and it looks good, but it's also a time when people really are kind of agreeing, and it tends to turn right around then when things look really good. So American Express looking great, Bank of America looking great, Citigroup, well, looking as Citigroup can look. Okay, JP Morgan kind of looking iffy, but it broke out. I still, to this day, I find that somewhat amazing, but, what are you going to do? Wells Fargo, well, it's made a little rally. Apparently Warren Buffett sold Wells Fargo, so it didn't look like he got the best price for it, did it? But I can't speak poorly of him, because Berkshire Hathaway is running away with it again with the whole banking industry. And he now what I can get to though is a little bit of reefer madness and some of the stocks that we showed you and want to show you that are really worth buying because they're not overvalued. The other things that we've shown you are somewhat a run a long ways, and so they're not really worth buying if you buy low, sell high. Okay, so we talked about the cannabis stocks, and they apparently are in great patterns to buy. We talked about that last week, and we talked about it last weekend, and we're going to talk about it today and keep talking about it because they're at the beginning of what appears to be a long run. And right now, this is Aurora Cannabis. It looks great. This is Canopy Group. Looks great. And since we mentioned it, all of these are up dramatically. Tilray, great. This is Hecla Mining. Great. Look at that. The stock is held up and it's ready to go. This is the kind of stock, this is exactly the kind of thing you should be looking for, is a stock that is holding up really well relative to, the index or the metal or whatever. This is Seabridge. This is a gold company. Again, it held up really well, although one could read the break here, the red circle, as a bad thing, but then it held up really well. So, maybe you got out of it there, but, now it's starting to look really good. You didn't have to necessarily buy back into it. So, this is Alcoa aluminum. Look at that, just soaring, okay? Coeur d'Alene, hard to analyze, but one of my favorites, this thing has traded as high as 75. El Dorado Gold, another small company, and here's what the interesting thing is. That was El Dorado Gold for a year. Okay, this is a year right there. Okay, see that? All right, now this is 20 years. Now in 20 years, okay, you've got El Dorado Gold that has traded as high as 105. Okay, gold at a lower price than today, and all of a sudden it's made a rounded bottom and it's gotten out of a long downtrend. How can that the little squiggles and swaggles are nothing by comparison to the potential of an El Dorado Gold or Coeur d'Alene? This is Rio Tinto. Rio Tinto, see, here's the thing. You can't really recommend Rio Tinto here because it's gone up a long ways, but Rio Tinto is like the largest metal producer in the world. It and zinc and lead and all kinds of stuff like that not the basic things that you hear about, but it is just, again, soaring. All right, and the VIX we got right here. It is the red line is really a line of where the bottoms are, but the VIX can go a lot lower. The VIX is still a little too high, and there's a little too much volatility in the market. So I'd like to see the VIX. VIX is going to probably break down here, and we've got some time before things start really going haywire. We just want to get you prepared, and that's and that's our presentation for today. And we come here. We're so glad that you guys come here to be informed, not misled, to get information, education without fabrication. And please like us, subscribe to us so that we can stay on the air. We love you, and if you have any questions, please send them on in. We have letters, but those are love letters. I want to hear your actual technical letters, not how much you women love me. Okay, so with that, we will see you next time. Okay, talk to you later. Bye bye.